the best of Money Matters. Market View on Money FM 89.3.
You're listening to Money FM 89.3, and it's now time for Market View, where we take a look at how the Singapore stock market closed for the day, the biggest movers, sectors, and companies to watch to help you better position your portfolios. I'm Alexandra Parada. First, let's take a quick recap of how the STI closed for the day. At the close, the STI closed down at 0.1% at 3,968 points. Looking at the sectors to watch, Asian markets are taking a cautious stance ahead of Trump's looming April 2nd tariff announcement, since there's uncertainty surrounding the impact on global trade, with markets already showing signs of volatility. And on the corporate front, we're seeing moves from the companies like Keppel, which has recently divested its stake in a Vietnamese real estate project, and CapitaLand Ascendas Reit, which is expanding its footprint in the life sciences sector with the redevelopment of One Science Park Drive. And now for more market moves and views, joining us today is Dan Chang, investment specialist and trading representative at PhillipCapital. Hi, Dan. Welcome to the show.
Hi. Happy Tuesday.
Happy Tuesday. Okay, Dan, so let's start off with the Singapore stock market. The STI crossed the 4,000 mark for the first time in its 59-year history last week. So how did the STI fare today, and has it kept up with the same positive momentum? What moved markets?
Well, yes, actually last Friday, the STI briefly crossed the 4,000 mark in early trade, which I would say is really a historic moment. But then again, at the end of last Friday, right, the STI couldn't quite hold on, pulling back to close at 3,972 points. And what happened is that this morning, STI actually got off to a rocky start, dragged down by hotter than expected US PCE data, and of course jitters over Trump's tariff, which is set to kick in tomorrow, 2nd of April. The STI index actually opened quite deep in the red today, down more than 30 points, before staging a recovery in the afternoon to close at 3,968 points, down 3 points for the day. So as to your question, that has it kept up with the positive momentum? Well, I think the uptrend remained intact for now, but if you were to see a few more lower lows going forward, right, the market may just start to turn sideways. So investors are watching closely. I think volatility could be the name of the game in the near term, especially with Trump's unpredictable nature. And, we never know if he double down or relent tomorrow. So anything could happen.
I see. Okay, now let's take a quick look at some of the biggest movers today. So Keppel just divested its 42% stake in a Vietnam-based real estate project, Palm City, unlocking $136.6 million in cash proceeds. Now, given Keppel's ongoing shift towards asset management, what does this mean for its future growth strategy?
Yes, I think the HO strategy of these buy low, sell high still applies as long as one is a for-profit organization. This divestment, right, not only unlock, as you mentioned, 136 million in cash proceeds for Keppel, it actually also brought in a net divestment profit of about 55 million Sing dollars for Keppel, which is, in my opinion, is quite a handsome profit. However, this divestment, right, isn't just about, cashing in on a successful investment. It is actually quite a strategic move that aligns with Keppel transformation into, this global asset-light manager. And I think this divestment is another step forward in Keppel's plan to really monetize cumulative of 10 billion to 12 billion of assets by the end of 2026. So yes, I think they are still on track. So I think in essence, right, the divestment isn't just a farewell to these real estate, but it's actually a strategic pivot to really optimize their portfolio, enhance return, and possibly position themselves at the forefront of these asset management arena.
I see. Now, meanwhile, the CapitaLand Ascendas Reit has also completed the $883 million redevelopment of One Science Park Drive. Now, with REITs facing challenges from higher interest rates, do you see this as a smart pivot into higher growth sectors?
Yes, for sure. I think this redevelopment is a strategic move to capitalize on, these high growth sectors like biomedical, digital, and technology. And this project actually aligns with Singapore focus on healthcare and deep tech, thus positioning these CapitaLand Ascendas Reit to attract really quality tenants and enhance rental income. Of course, you mentioned about these challenges from higher interest rate. I think for sure there will be some challenges, but if we look at the FY 2024 financials of these CapitaLand Ascendas Reit, right, they have thus far maintained quite a robust financial position. Their aggregate leverage is only 37.7%, and 83% of their borrowing are actually on fixed or hedge rate. And, the interest coverage ratio, the ICR, as of end of FY 2024 is 3.6 times, which is much higher than the minimum ICR threshold of 1.5 times estimated by MAS. So yes, I think this prudent financial management should support these, redevelopment initiative, including the one we have just mentioned, the one at One Science Park.
Okay, then now we need to look at another one. So Yangzijiang Financial fell 10% today after it agreed to divest its entire treasury shareholding of 193.5 million shares at $0.72 a piece. Now, given that the stock has been trading at a discount, do you think this move will unlock more value for its shareholders?
Yeah, actually at closing, right, it actually parked quite a fair bit of loss. It's only down 3.7% to close at 76.5 cents. And yes, this morning, 10% drop certainly caught investors' attention. And I believe that this divestment, right, could be seen as a strategic effort to unlock value for shareholders. By selling these treasury shares, Yangzijiang Financial actually aimed to enhance liquidity and potentially deploy this capital into more higher yielding instrument, investment, probably in the maritime sector, as what they have mentioned in their press release. And this could just lead to improved returns over time and possibly a narrowing to the stock's discount to its intrinsic value. However, as we have seen today, the immediate market reaction suggested some investor concern, perhaps due to the dilution effect and questioning about the timing of this sale. But I think overall, right, investors should keep an eye on how the company redeploy and reinvest these funds and whether it aligns with their growth objectives or not.
Okay, now on to another major headline, which you actually talked about earlier, is Trump's looming April 2nd tariff announcement. Now, yes. Asian markets have been treading cautiously, but could the potential tariffs be lighter than feared? What's the sentiment so far?
I think it can all sum up into one word, cautious. The anticipation surrounding these what Trump called a Liberation Day, has certainly kept these Asian markets on the edge. The uncertainty stemmed from these mixed signals about the scope of these tariffs. Initially there were indications of a broad and aggressive approach by Donald Trump, but now there's a recent report that hint at maybe a potentially narrower and more targeted implementation. And given this ambiguity, right, market sentiment tends to remain cautious. And I think investors that I spoke to, right, are adopting a wait-and-see approach, hoping for clarity before, bracing for impact. As I always share with my client, right, in time of uncertainty, it is always better to be reactive than proactive. It's always better off to lose an investment opportunity than to losing money. Yeah, so it's a bit like waiting for a storm. You hope it passes with just a drizzle, but it's always good to keep an umbrella with you on hand. Yeah.
Yeah, but Trump did say he will be very kind with tariffs, but the markets aren't convinced. We've witnessed heightened volatility in global equities with key European and Asian indexes closing lower. Now, so would a softer than expected announcement spark a relief rally then?
For sure, I strongly believe so. In my own opinion, because I think the stock market is a collective display of emotions. A display of expectations. It's very much a manifest of investor psychology. So, President Trump has already indicated that he will be very kind with the tariff. I mean, a lot of us, a lot of market watcher, remain very skeptical. I mean, recent reports have suggested that tariffs may be more targeted and narrowed than initial fear. So if the actual measures are indeed softer than anticipated, right, I think we could witness a relief rally as, investors breathe a sigh of relief. However, I mean, given the current climate of all these uncertainties, there is no harm bringing an umbrella handy, just even if, the weather forecast call for sunshine.
Yeah, but now Japan's business sentiment has actually already taken a hit even before Trump's auto tariffs were announced. Now, the latest Takan survey showed a drop in confidence among manufacturers. So how much of this was driven by concerns over U.S.'s protectionism? And does this make the BOJ's next rate decision in May more complicated?
Yes, I think this decline is largely attributed to these, as you mentioned, to concern over these U.S. protectionist policies, especially the proposed tariff on Japanese auto imports by the Trump administration. I mean, we have seen the last few days, right? Japanese car maker like Toyota, Honda, and Nissan all saw drastic drop in their share price. And looking ahead, right, I think this development do complicate the BOJ's decision-making process for these upcoming May policy meetings. I mean, they are being caught, the policymakers are being caught between rising domestic inflationary pressures, driven by factors like increased food costs and also external risks stemming from these potential U.S. trade measures. So I would like to think that this balancing act would make, setting these monetary policy more challenging as they strive to, really support these economic growth while keeping the inflation in check.
And now, before we wrap up, what's on your radar for the rest of the week? Any key trends or developments that could move markets?
Wow, there's yes. In fact, there's quite a lot to go on for the rest of the week, but I can just highlight the more important one. First off, of course, we have the tariff that is set to take effect tomorrow. We have to see how the whole thing play out, whether, Trump's roll out a softer or a harder than expected tariff, or if there's any retaliatory tariff from the other trading partners. Then on Thursday, right, we have a big combo of, Chinese and Japanese service PMI data. We also have the ECB's monetary policy statement and the OPEC meeting. We shall sort of shape our understanding of the global economic climate. And of course, we also have the all-important U.S. job data, specifically the non-farm payroll on Friday, which will give us a glimpse of the strength of the U.S. labor market. Yeah, and I think these are the three most important events to look out for.
Okay, well, thank you so much, Dan, for joining us today.
Thank you, Alex. Thanks for having me.
That was Dan Chang, investment specialist and trading representative at PhillipCapital. This has been Market View on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.